Welcome back to part 2 of our series, Working with Nate Skelly, where we help Christians prepare for a confident and purposeful retirement. And at Financial Pathway, we want to be able to help our clients do this in 3 primary ways: investing their money more efficiently, minimizing their tax bill, and successfully reaching their specific financial goals. And today we're going to talk about a big component of that process, and that is investment management. Now, when you hear that phrase, you might immediately think of 2 different extremes. On one side, you might think of the day trader, somebody with 9 different screens. They're glued to the markets, chasing hot stocks, constantly buying and selling. Or maybe you think, investment management, isn't that kind of a thing of the past? That's no longer needed. All I have to do is buy an S&P 500 fund and I'm good, or I can easily manage my own investments on Robinhood or on Schwab. And hey, after all, I've been doing pretty good. And the truth is that good investing, in my opinion, lives somewhere in between those 2 extremes. Day trading, short-term market predictions, those rarely end well. But a do-it-yourself approach to managing your investments very often leaves you open to a long list of potential blind spots. So let's talk about our investment approach with our clients at Financial Pathway. We take what I like to call an evidence-based approach. We're not interested in the newest craze, or taking big swings, or chasing a new fad. We're interested in what the evidence teaches us. And so what we like to do is look at factors, certain characteristics that have consistently done well for decade after decade and across the entire world market. And these would be things like value, companies that their price compared to how much they actually make is undervalued. Things like size, smaller companies with greater growth potential, profitability and quality of those companies, companies with strong earnings, and momentum, stocks that have been trending positively. So instead of just trying to guess and go with our gut feeling, what's going to be the next hot stock, instead, we lean our investments towards companies that have those characteristics that have consistently shown to do well, and we lean away from the ones that don't have those characteristics. And it's like a seasoned fisherman who knows where to drop his line. We know that experience and patience are going to be an investor's best friend. So for our clients, we want to make sure that your investments check several different boxes. First of all, that they're diversified. And all that means is that we're going to spread our money out among thousands of different investments. We're not just going to take big swings on a small handful. We're going to be rules-based. So we're going to have very strict boundaries and rules set up ahead of time for how we invest our money so that we're not driven by gut feelings or what we read on CNBC that morning. Thirdly, we're going to rebalance regularly because things are going to start to drift, and we want to continually buy low and sell high and keep our investments in the boundaries that we've set for them. Fourthly, we're going to make sure that each client can be taking the right amount of risk, and that's going to look different for each person. Just like Goldilocks and the 3 Bears, we want to find the mix of growth investments and conservative investments that is just right for you. Fifth, we're going to be tax smart. We'll talk more about this in the 3rd episode, but we're going to use the right types of funds, the right types of accounts for the right purpose to make sure that more money ends up in our pocket and not in Uncle Sam's pocket. And then lastly, we want to be that trusted guide. Just like a personal trainer for, that's going to keep you accountable to your health goals. We want to make sure that you're saving the right amount, that you stay calm and stick with the strategy even when markets look scary, because they definitely will look scary at times. And then also not just investing, but also withdrawing. Because it's easy to talk about growing our money, but eventually, for most of us, there's going to come a time where we need to access that money. After all, that's the whole point of saving for retirement. And as an investment manager, we're not just going to help you grow your money, we're also going to help you spend it. And sometimes that's a little harder to do psychologically. Now, when you're retired and living off of your investments, it's not just about having a portfolio, it's knowing things like how much to withdraw, when to adjust the plan, which accounts to pull from, in which order. So that's why we build a rules-based withdrawal strategy for your situation, and it gives clarity, it gives you confidence on how to take money out without running out of money too soon. And if you want to hear more on this, you can go back to episode 140 of the podcast, where I broke down the guardrails approach in a little bit more detail. And then, of course, we also integrate tax planning to make sure that those withdrawals are efficient. Which account are we pulling from? Are we pulling from cash reserves? And if we do this well, not only does this stretch your money further, but it increases your odds of being able to leave something for your kids or grandkids or charitable causes. Now, lastly, I do want to talk a little bit about how I get paid, because it's very important to be clear what is our compensation and what is our incentive here. What we do is we've chosen to do a fee that is based on the assets under management. Sometimes you'll hear the AUM for short. And really what that means is it doesn't disrupt your monthly cash flow. So the fee is taken directly out of your account. You don't pay us via check or credit card, so it doesn't disrupt your cash flow. It scales with the value that we provide. So if your investments grow, so does our compensation. If your investments go down, so does our compensation. And what that does is it incentivizes us to care deeply about your success, because your outcomes are tied to ours. And that helps us to sit on the same side of the table as you to say, what is in your best interest, and how do we make sure that we put you in things that are likely to go up over time so that you do better. And for most of our clients, this AUM fee ends up costing less than a flat annual retainer, a flat fee that some advisors charge for similar services. So it's also important for me to notate here that we don't receive commissions or kickbacks. So what that helps us to do is there's no products, there's no insurance policies, there's no Medicare plans that where if we refer you or we suggest this, we get some type of kickback or some type of commission for that. That does not exist. And that helps us to try to keep our recommendations as conflict-free as possible, but also give you more confidence that what we're recommending to you is in your best interest. And at the end of the day, we are even held to a fiduciary standard, and that's just a fancy word that means we are legally obligated to act in your best interest, which, what a novel thought for a financial planner. So to recap, successful investing isn't about chasing fads or picking one fund and calling it a day. It's about discipline. It's about behavior. It's about following an evidence-based strategy that keeps you on track. And at Financial Pathway, we work best with people who want to delegate that investment management. They don't want to do it themselves. But they also want to have a trusted guide who's going to educate them, who's going to help monitor those investments, and who's going to walk with them along that investment journey. So if you want to learn more, you can always visit nateskelly.com to schedule a call with me, or you can email me directly at info@nateskelly.com. And I hope you'll stick around for part 3 of this series. We're going to be talking about everybody's favorite subject, and that is taxes, and how we can be proactive about minimizing your tax bill. Thanks for watching and listening.